Do you know how to record bad debts and the provision for bad debts in the accounts? I'm Thomas Harwood and welcome to the Accounting Student, where we create free and short videos so that you can learn about accounting. Today's video is looking at the double entry for bad debts and the provision for bad debts. Just as a quick refresh, we found out in the prior video on what are bad debts that bad debts arise when a credit customer does not pay their debts. Additionally, some of the reasons for a bad debt happening could be due to a customer going bankrupt. The business may be a victim of fraud. There could be a dispute on the goods or services, or the debt might be too small to be worth pursuing in law. Also, in the video on what is a provision for bad debts, we found out that a provision is usually calculated by a business to estimate the debtors that will turn into bad debts. The bad debt provision is an approximate value which is set against the future recognition of debtors as being uncollectible, and this will normally be calculated as a percentage of the total debtors amount. Let's now look at how they are both treated in the accounts. Terry is a car reseller who sells the majority of his cars on credit. Recently, one of the customers that bought a red sports car went bankrupt and could not pay her debts of £5,000 owing to Terry. Also, due to this customer going bankrupt, Terry wants to account for the debtors who might also not be able to pay him in the year, as well as for future periods. He currently has £75,000 in debtors, and from previous experience, 6% of debtors do not pay back. How will Terry record the scenarios in the accounts? Firstly, it was briefly mentioned in both the previous videos how bad debts and its provision is treated in the accounts. A bad debt is recorded in the accounts as an expense on the balance sheet and reduces the net income, whereas the provision is recorded in a bad debt expense account and the provision for bad debts account. For the £5,000 of bad debts, we would enter the details on the debit side of the bad debt expenses T account. Let's assume that the transaction took place on the 30th of November 2017, which can be shown as 30/11/2017. Then we will note it as the customer's name, for this example S. Jones, in the details column, because that is the name of the other account that has been affected during the transaction. And lastly, 5,000 is entered in the pound column. As this is the only bad debt in the period, we will close off the account, and therefore both sides need to total to £5,000 like so. However, £5,000 is missing on the credit side. As a result, we will post £5,000 to the profit and loss account, as this is an expense. Now, for the provision of bad debts, we should work out the provision amount first, which will be the debtors amount multiplied by the historical percentage of debtors that do not pay. So the provision will be £75,000 times by 6%, which equals £4,500. Since we know the provision amount, we will enter the details on the credit side of the provision for bad debts T accounts. The transaction took place on the same date, which can be shown as 30/11/2017. Then we will note the detail as profit and loss, because that is the name of the other account affected during the transaction, and it will be treated as an expense. And lastly, 4,500 is entered in the pound column. So that was the explanation of the double entry for bad debts and the provision for bad debts. If you enjoyed it, press the like button. If you have a question you want answered, leave it in the comments below and we'll try our best to answer it. And if you're not already subscribed, make sure you click the red subscribe button to keep updated with the Accounting Student. Thanks for watching. We'll see you next time.